on. Banks, right? I mean, PNB is up about 2%. AU Bank is up a third. SBI is up a quarter. Bank of Baroda is higher by a little bit. But on the other side, you've got Kotak, which is down almost a full 1%. Federal Bank is down a third. So it's pretty mixed at this point in time. There is no overarching impact of this 2,000 rupee note withdrawal, as some were saying, well, you know, accretion to deposits and kind of those kind of things, cost of money coming off because of this. But, you know, the market is kind of flat at this stage. 18,188 or so is where we are at. Maybe just a few other names before we bring in our market master of the day. Adani Enterprises and Adani Ports should come up. Both are, one is up 5, the other is up 3. Adani Wilmar, actually the entire group is higher, and they are at the top of the list in terms of gainers. So Enterprises 5, Ports 3%, and big volumes on each of these. Ports will come up on your screen. Wilmar is up 7%. You've got Adani Total Gas, which is up 5%. Transmission is up 5%. Adani Power is up 5%. So, I mean, I can, at least right now on my screen, Adani Green is up 5%. So 4 out of the Adani Group stocks that I mentioned are on sort of limits, upper daily limits, the 5% limit there. Nigel mentioned Muthoot Finance. I don't remember the last time Muthoot reacted. I mean, it does react and then it kind of fades away, but hopefully the gains this time stay. Numbers are good, as Abhishek explained earlier, 1,082, and you'll hear from the management as well in a bit. Route Mobile did very well on Friday. It's up another 4.5%, 5% this morning. And you can go down the list, but volumes are a little lackluster right now. Sonia.
I just want to mention a couple of more stocks. Yeah. Gland Pharma continues to be one of the weakest stocks. I mean, despite the steep fall last week, Gland Pharma is seeing an additional 10% fall this morning, so not looking good over there. On Balaji Amines, our colleague Sonal had a chance to catch up with the management on this reason behind this resignation of 5 independent directors. And, you know, one of them suggests that the CFO has resigned to focus on the subsidiary company, Balaji Specialty Chemicals Limited. Another resignation has come through because of age-related, you know, issues, and the others are due to personal reasons. So several reasons given for the resignation, but the CFO resignation is to focus on the subsidiary company, Balaji Specialty Chemicals. Nevertheless, the street doesn't like it at all, and the stock is down about 16%, so keep an eye out on that. And Siemens, you know, we were talking about how, Vivek was telling us about how the selling of the geared motor business to the parent for 2,200 crores has not gone down well. Nomura has downgraded as well. So this market, I guess, is in a mood to punish any hint of bad news.
Yeah, I mean, I think Cochin reported numbers as well, right? Cochin, not sure, but 9.5%. That's a big cut on, you know, a well-tracked, generally liked name as well. 10% lower, 490 on Cochin Shipyard. So that's Glenmark, of course, I think we mentioned earlier. MCX is down about 2.33%. KEC is down 2%. VATech Vabag is down about 4%. So there is enough activity on the downside as well. And I'm only listing things with volumes. APL Apollo, IRB, and a few others are down between 2 and 3%. The Nifty is bouncing back. It's in the green. We are up about 30 points. 18,234, 35 is where the pull sort of, you know, is coming to. And the Bank Nifty will come up on your screen as well. That is absolutely flat, 0.08% lower. So it's the Nifty which is coming back into the green in a sort of sharp way within the first 5 minutes of open. Vineet Sambre is head of equities, DSP Investment Managers. He's with us now to take some questions. Vineet, good to have you with us here. Thank you very much for your time. You know, let's just start with tracking the pace of earnings, Vineet, and how they are panning out to be. I put out a piece a week before last, and you know, equal number of, and I looked at what these numbers for the fourth quarter are doing to full year FY24 estimates, earnings estimates, and almost equal number of downgrades, equal number of upgrades. So kind of mixed out there. But a week has passed since. What is your own estimate and how are you tracking things?
So, Prashant, I think as we entered into the earnings season, I was slightly more skeptical around the growth metrics overall. And what I sort of also felt, like you mentioned, is that in terms of the companies broadly, they have either outperformed or they have been in line. The number of disappointments have been slightly on the lower side. And I think the thesis which sort of I had in mind, wherein, you know, while we may have The top line may be moderating for many segments, but I think it will be the profitability which will start improving. But I was not anticipating it will start happening starting this quarter. But what we have witnessed, let's say, across segments like consumers, automobiles, cement, all of these segments, they have benefited because of the lowering of the input prices, and that has benefited the profitability. And I think this is important matrix which is likely to play out over the next maybe 2 or 3 quarters, and I think which is what I believe is likely to keep the earnings momentum maybe okay to slightly positive. So I think overall, I would say that earnings have been slightly better than my anticipation. The one part of the segment, which is the investments, engineering, capital goods, I think that continues its strong momentum. The order books, around these companies, defense, engineering, and all those stuff are doing well. So I would say that all in all, it's been a better, outcome as compared to the expectation.
Okay, so earnings are better than what you had anticipated. That's always a good thing. Vineet, hi, good morning. Is there more valuation headroom for a market like India? Citi put out a note this morning where they say that the market valuations are quite reasonable if you compare them to the last 5-year averages. How are you feeling about it, and what kind of upside do you see purely on a valuation parameter?
So maybe I think the markets may be reasonably priced in terms of valuations, but we should, I think what we are also trying to sort of keep in mind is that we will have some of these macro news flows which are going to keep the overall upmove in check as well. Whereas, as I anticipate the earnings momentum to start accelerating gradually over the next 1 or 2 quarters, will also mean that we don't see a lot of downside when it comes to India, specific earnings factor. So I think the other important matrix, which is the interest rates in the economy, which is also one of the important factors for the valuations, those are also helpful in a way. So I would say that all in all, I believe that while valuations are reasonable, all these volatility, the global volatility around recession and all may likely keep some of these upsides under check, but the downside also remains protected. And I think it's a good market from long-term investment perspective, as and when there are corrections for any reasons. I think those are the points where investors need to sort of get into the equities with a long-term view.
All right. Hi, Vineet. One segment that was ignored for the last few years has been the healthcare space, right? I mean, the Pharma index is what I'm referring to. But, you briefly mentioned the last time around that you're giving it a closer look. So how are you approaching it? Are you going for the diagnostic companies? Are you looking with some of these bombed out pharma names? Or is there another way you're looking to play it?
So, Nigel, I think we have sort of gone wrong in a way in terms of we are, having decent exposure into the pharmaceutical and healthcare businesses. We still believe that the earning cycle for the pharmaceutical companies largely will play out like it is happening now in case of, as I mentioned, consumers, cement, automobile. I think the same story is likely to play out in case of pharmaceutical, wherein they have got impacted because of the higher raw material prices. And those also, there are definite signals that, they are also cooling off. So to me, I think over the next 1 year, maybe there is a good, momentum likely. As you mentioned, they are, some of the companies, they have bombed out, the earnings have got impacted. So I think a low base has got created. And from a perspective that, when the world is going to remain volatile, I think what are the sectors which are maybe provide some amount of defense in terms of the business, and also there could be a tailwind in terms of the margins. I think healthcare, and within that, pharmaceutical companies forms, good basket there. As far as the other part of the healthcare is concerned, the hospitals, diagnostic labs, they are maybe slightly on the expensive side. Maybe at right valuations, it could be prudent to look at those as well, given the long-term outlook in those names.
Okay, this is a question not so much, Vineet, about what you like and not. I just wanted your thoughts on, as an industry veteran, on the SEBI rules with regards to total expense ratio charged by mutual funds. Now, the impact will be assessed depending on whether you will absorb all of it or you will pass it downstream to brokers, distributors, etc. And if you do pass it on, how much will you pass it on by? So just wanted your thoughts, Vineet, in terms of what we're likely to see.
So I think first of all, I think in terms of the overall regulatory changes, the important ones, what we want to see, I think this would be in a way one of the major ones. And beyond this, I don't think there are going to be big changes. I think whatever happens to make the regulatory framework stronger, I think that is very welcome step in a way. And as far as the changes are concerned, I think we are still contemplating. We will be engaging with the regulators. We will share our views. But I think, as you said, definitely there will be some amount of bearing which will be done by the mutual fund companies. Some amount of the cost increases will be passed on to the distribution chain. And all those metrics are still yet to be worked out, but not yet finalized. But I think net, I think it's going to be not as bad is what I feel.
Okay. Vineet, I wanted your thoughts on the pharmaceutical space because there are a lot of accidents this quarter in terms of earnings. I mean, Divis has seen a complete collapse in its margins in the second half of the year. You've seen some big accidents like Gland Pharma, which have halved in the last, 1 month or so. What's happening here? Is it just pricing pressure in the US or has growth slowed down entirely? And what do you do as an investor in this space?
So I think within pharmaceutical, we need to also bifurcate where are the companies which had seen significant increases in the earnings because of COVID benefit, and I think those are sort of going away. And but there are also companies which didn't see as much benefit, one-off benefit, and I think those are being pretty steady. I can just maybe mention names of the likes of, let's say, Cipla, Alchem. All those type of companies are pretty steady. So I think there, for the companies which had seen one-off gains, they are now experiencing these, normalization is what I would say. At some point, maybe all these businesses are, if you ask me, these are, very competitive businesses. They have created moats around what they have been selling. So I don't think that business value gets impacted as much over longer term. So at some point, these will also become good to buy. It's just that at what valuation, how should one price in
Yes.
these one-offs, and how should one look at normalized level of earnings over the next maybe 2 or 3 years?
Okay, all right, Vinny, thanks so much for joining in. Always a pleasure hearing your thoughts. Looking forward to having a chat with you in the coming weeks as well. Let's focus on a couple of earnings reactions, though. JSW Steel, well, the stock is not moving much, but otherwise, the numbers are rather good. Revenue, EBITDA, both came in better than what we were working with. The subsidiaries, they reported a very, very good performance in the fourth quarter. To understand what's the way ahead, Mr. Jayant Acharya, the Deputy MD of JSW Steel, joins us on the show. Hi, Mr. Acharya. First of all, congratulations on your new appointment and wishing you all the best at the helm of JSW Steel. Let's focus on a couple of aspects, though. One of the positives was the average coking coal cost was low on quarter 4. Could you tell us how much lower was it? And more importantly, for quarter 1 FY24, how will coking coal cost change?
So our coking coal cost in the last quarter dropped by about $6. We had guided a flattish coking coal price from quarter 3 to quarter 4. In the quarter 3, it was $280. In quarter 4, it was $274 CFR India. We expect an increase of about $10 to $15 in coking coal going into quarter 1.
Okay, can you compare the spot steel prices with the Q4 average? Just trying to understand, how do domestic steel prices compare with imported steel and what is the way forward?
Yeah, so I think the steel prices have held steady for the months of February, March. Post that, there has been some correction in the international markets driven by a subdued sentiment in China, higher exports from China. So we have seen the international prices of steel come off somewhat. It is following in the raw material prices as well. So there has been a price correction in the month of May already. We have seen about a 25 kind of dollar drop in the prices as we speak in the month of May from where we were in the month of February, March.
Mr. Acharya, can you compare imported steel prices with the domestic prices? Where do they stand?
So as we see imported steel today, from an arrival perspective, if we were to look at April, June, there is a volatility and we could see some softness coming into the June month. However, I think the margins will remain by and large stable, primarily because of the coking coal cost starting to flow through from June into July, September quarter. So we expect the raw material prices to come down as well. So therefore, we do not see an impact on the margins.
All right, Mr. Charya, what does it mean for EBITDA per ton from here on? You know, if I compare it with your Q4 FY23, which delivered a bit of an improvement.
Yes, so we expect that the EBITDA per ton for the first half, it may be marginally lower in the Q1, but if you were to look at Q1 and Q2, yes, we should be in a similar range as to what we have given in Q4.
Okay, a similar range as in Q4. You know, JSW Steel USA Ohio's losses have come down quarter on quarter, so that's a good thing. Does it break even from here at any point? Also, can the Italian operations contribute about $10 to $15 million per quarter? Just trying to understand whether the overseas operations are seeing an improvement operationally.
Yeah, so let me put it this way. Our US operations have done very well on operational parameters. If I were to first look at Baytown, which is our plate mill, which is really doing well on the back of infrastructure and on the back of renewable energy spend in the US, we are seeing a quarterly EBITDA of $25.7 million for the Baytown operations, which was $17 million approximately last quarter. If you were to look at the year as a whole, Baytown operations has done $100 million of EBITDA. However, if you look at Ohio, the operations have improved, the operational parameters have improved. We have done a very good volume in the month of March, going into the quarter April, June as well. We see a good demand in Ohio, but Ohio has not been able to break even last quarter. It has had a loss at an EBITDA level of $12 million. However, the loss has come down from $23 million to $12 million. We expect going forward that the losses in Ohio will be lower on better expected performance by the US market. If you were to look at Italy, where we have done an EBITDA of $13.5 million last quarter, there has been a good traction because of the rail orders which we have got from the Italian rail. And that particular order is likely to stand us in good stead for the year as a whole. And we see Italian operations on the back of rail doing quite well. So we expect a similar kind of a quarterly rate to be achieved during the next year as well.
Mr. Acharya, now given the 18,800 crore capex plan, how will debt move from here? What is the outlook on debt?
Our debt numbers, as you have seen, have come down by about 10,000 crores last year closing. We have a strong cash balance, and the way we look at it, that the debt would remain more or less similar. And the only addition which would come is the Monet, the JISPL merger, once that is declared, that would increase the debt by about 3,000 odd crores. So that is the debt addition we see. So it should be in the range of 62,000 crores.
All right, marginally higher than in comparison to what you delivered at the end of last year. Let's focus on an interesting topic then, inorganic growth. How interested is JSW Steel in NMDC Steel or NINL?
So we have already given our expression of interest, and we are one of the shortlisted bidder for NMDC. And the process of data room and the due diligence has just started. We would evaluate the asset in more detail once our people visit the site and take a view on the data as well. So as long as it is value accretive, we will look at it. We have a lot of scope for brownfield expansions, and we see our capacities which can rise at a low specific investment cost in the brownfield expansions as well. So we would focus on those, and we will look at assets which make a value accretive proposal to JSW and the shareholders as well.
All right. Mr. Acharya, but we want to hear more about that because you're interested in NMDC Steel, but you're also talking about brownfield expansion. How much will you spend for NMDC Steel? If you could give us per million ton, how much are you willing to pay?
I wish I knew, Nigel. That's a very difficult question to answer at this stage. Let the process begin, then we'll be able to tell you where we are.
Okay, good speaking to you, Mr. Acharya. Everything's good, but it's good at a price. So let's see how that one goes on that front. NMDC Steel, that's the one that Mr. Acharya is referring to. Well, let's focus on another big stock. Balaji Amines, the stock was down close to around 16%. It's recovered a little bit lower from the lows of the day. Sonal is joining us to tell us about why the stock was lower, and she's got some clarification from the management as well. Sonal?
Thank you so much for that. Well, two reasons why Balaji Amines is lower in trade. First is their financial earnings, which were very weak, both on a quarter-on-quarter and on a YOY basis. There was an expectation that quarter 4 could be better, at least sequentially, but that hasn't come through. So revenues, they have declined by 40%. EBITDA is down 40%. Margins also have declined to 38%, leading to a profit decline of 58% for the company to come at 55 crore rupees. The company says the fall in margins was largely on account of weaker demand coming in from the pharma segment and the agro sector as well. They anticipate return to growth in margin levels similar to COVID-19 levels or pre-COVID-19 levels in due course. They actually saw very high realizations during the COVID period, and now they are normalizing, and that's the reason of revenues are also looking lower. They had planned their capex according to pre-COVID realizations, and that's why profits, what they had anticipated, will be at those levels, and revenues from the newer projects, they will start hitting their financials from FY24 itself. So that is something that will aid profitability. Now, what is the other thing that is actually disappointing the street as well? And that's resignations coming in from various independent directors. There has been resignation of 5 independent directors. They say it is because of personal reasons, and one of them is attaining age of 75 years as well. Now, important to note that some of them are on the audit committee. One of them is the chairperson of the audit committee as well. So that poses some questions as well. Additionally, CFO also has resigned to focus on the subsidiary company, which is Balaji Specialty Chemicals, and that one is going to be listed on bourses. They have filed their DRHP. So now, of course, it will come on the bourses as well very soon. So that is one of the reasons. However, they have appointed another CFO, Mr. Srinivas Reddy, who is appointed as the whole-time director and CFO till 31st March of 2026. But these resignations, so many of them who've come on board, is something that is worrying the street. This is added on by the weak performance that continues for Balaji Amines for 3rd quarter in a row.
Okay, thanks a lot for that. The street is definitely quite disappointed. The stock is down about 12.5%. But let's do one thing. Let's talk about some earnings as well. That was, of course, on Balaji Amines, but Bandhan Bank is the other stock that's on our radar. Just pull up the chart for you. It reported a weak set of numbers. Operationally, the numbers didn't look good. It was lower provisions that aided the PAT on a quarter-on-quarter basis. But there were positives, of course. The slippages have fallen. They're down almost 65% quarter-on-quarter. So, in a sense, it was, a bit of a mixed performance. Let's find out more from the management. The asset quality has also seen an improvement. Chandrasekhar Ghosh, who is the Managing Director and CEO of Bandhan Bank, joins in. Mr. Ghosh, good morning, and always great speaking to you because we get to learn about the company and the industry as well. So thank you for joining us. I wanted to understand a little bit about your FY24 guidance that you put out in the conference call. It is on the lower side when you compare, your loan growth guidance, when you compare it to what you've done in the past. So can you tell us a little bit about it? What is the expectation for FY24 and what are the trends looking like now?
Thank you. If I see that the 4th quarter of last financial year, means in the financial year 23, we have seen that the 11 to 12% credit growth has come, which is shown that the credit growth has returned back. So that we are on that basis, we are projected the 23-24 will be like to credit growth of 20% and above.
Okay, so 20% growth is what you're looking at in terms of credit growth. Got that. No, I was just trying to understand, compared to what you've done in the past, this is slightly on the lower side, but got that nevertheless. The MFI loan growth, can you tell us a little bit about that? Are you trying to move away from the MFI portfolio? Is it because there is perhaps some pressure there, some competition as well creeping in? And what is the loan growth target for the MFI segment, particularly in FY24?
If you see that in the last financial year, that means if I go to this 2022 was in our microfinance portfolio was in a 62,000 crores, so including the individual credit. So last year it has come on that the 56,000 crore. But if I say that the whatever we are 10,000 crores nearly, sorry, it is an 8,000 crores is an write-off and the sale. Together it will make on that, it will be more than 62,000 crores. In that sense, the microcredit book has not come down because only showing that the growth has been 8% in the last quarter because of some this write-off happened and the restructured loan we have been write-off, we have been sold for that region. But we are projected because of the last quarter, it has come 8 to 9% growth in the microcredit book. It will be like to 17-18% growth in microcredit in the 23-24.
All right. Hi, Mr. Ghosh. Good morning. You're talking about NIMs in the vicinity of 7 to around 7.5%. So I wanted to ask you in that sort of a backdrop, what is the branch expansion plans that you have, point number one, and how do you look to shore up your CASA?
No, if you see that the first time come to the CASA, we know that situation of the last financial year. Everyone know that the circumstances rate have been increased. After that, also bank performed CASA 6% growth, which is coming from that the 39% to 39% from 36% CASA ratio. So it is a very good improvement happened within that situation. So we feel that it will be like to continue in this financial year 40%. This is a one. Second point on the branch expansion, we have a plan on that, the branch expansion 550 in the last financial year. So a couple of branches not yet open in the last financial year. It will be open the first half of this year. So when this will be like to complete in this branch open, I hope that the very good deposit growth will be like to come back, and the growth will be also very near to, I said the above of this, the credit growth, which is the 20%, will continue.
Mr. Ghosh, could you talk to us a little bit about, I mean, are we likely to see a sharp reduction in credit costs in FY24? And what will the numbers look like in your assessment?
If you see that this quarter, my credit cost has come down, which is the 2.9%, and from the 6.5% in the last quarter, it has been shown. But if you see that the full year credit cost has come 4.3, which was in the last year very high on that. So we are expected the collection efficiency has come improved as a normal, especially in the microcredit also. 96% collection efficiency from last quarter has come to this 98.5%. So all these parameters shows is there the credit cost is come down from the next financial year, means 23-24. I expected the 20% plus 20 basis point plus and minus.
Okay. Can you also help us with what the slippages could be going forward? Because, this time all those slippages have come down to about 1,100 crores. Is still quite at an elevated level. And the good part is your EEB stress pool has declined, which is, your non-performing assets, gross restructured assets, as well as the special accounts. So that entire stress pool has gone down. Just want to understand from you, is there a further decline in slippages and the EEB stress pool that's expected over the next couple of quarters? And if yes, what could the numbers look like compared to the 1,100 crores you saw this time?
I will be correct at my last, my mistake on that. My credit cost of the 23-24, it will be the 2% plus 20 basis point plus and minus.
Okay.
You said, you said 20 basis points plus minus 20 basis. That would have been lovely. Got that. 2% plus minus 20 basis points, right? That's the full year. Go on, sir. Go on. Sorry. To Sonia's question, Sonia.
Yeah. On the slippages, sir.
Okay. No, if you see that the slippage has come down. If I see that the last quarter, it's quarter 3, it was in a 3,600 crores has come down 1,100 crores, which is a 1/3 has come down. There is a 2 different cause on that. One cause is there, my all restructure loan have been completed. so that it is not any chance on that to come further. And second point, in the collection efficiency have been steadily coming up. So that is also helping us to not to slippage come. Third one trend I have been find out on that. 21, 22, 22, 23, whatever the loan we have been disbursed in microcredit, their collection, if is their on-time repayment rate has come 97% plus. But if I see that my last year, that is 22, 23, I have been seeing whatever the disbursement done, collection, that is on-time repayment rate has come 99% plus. That means the improving such a way, which have been shown that the very good way it has been controlled, and the customer has returned back to the normal position. So that the future, the slippage will be further come down, not coming up.
All right, final question, Mr. Ghosh, before we let you go. What about your cost to income ratio? That is a little bit elevated in the past quarter. What's the steady state range we should be working with?
To see that the cost to income ratio is there is in two factors in the bank. One side that the 550 branch open, the operational cost little bit increase. And the second point on that, the cost of fund also increased because of the rate hike, and we also increased the deposit rate. And these two also impacted in a bank to little bit cost to income ratio have been high. So I feel that another year maybe it will be like to continue, but in the from 24, 25 it will become again the control on the 40 to 42%.
Okay, all right, Mr. Ghosh, we'll let you go on that note. Thanks a lot for joining in. Appreciate your thoughts. That's Bandhan Bank. By the way, the market is it's actually picked up pace. So there's some buying on dips that we're seeing, which is great after many days of a downtick. The Nifty has now picked up, as you can see, up about 70 points. The sensex is up over 200 points. It's turning out to be a really sunny day of trade for the bulls. Let's slip into a quick break. We'll connect with George Alexander Muthoot, the MD of Muthoot Finance, on the other side to discuss their Q4 numbers. Stay tuned.
Okay, welcome back. 90 points higher, and this is something which we were alluding to in the morning, that we got a very good test of the 20-day moving average on Friday and a clean 100-point bounce. It was a very good session, and it's entirely possible that we, after this we try and retest some of the earlier highs, which is on the 15th of May, etc. I mean, last week. Could today itself turn out to be a decently good trending kind of a day? I mean, the evidence so far suggests that in that direction. So let's see. I mean, a lower start. I mean, the markets have picked up, and so far it's not been very much time. I mean, 30-40 minutes, but so far it's been pretty good. 18,300 is where we are now trading at. Now, let's stay with the financial space, and Muthoot Finance is the company on our radar next. They reported a good set of fourth quarter earnings. Gold assets under management has expanded, net interest margins have improved, loan growth is looking better, F524 guidance on the loan growth is also pretty good. George Alexander Muthoot is Managing Director at Muthoot Finance, and he's joining us right now to take some questions. Thank you very much for joining us, sir. Good morning, Prashant this side. It's always a pleasure, and it's good to see markets responding favorably to what are a decent, very good set of results, actually. But I want to start by asking you whether these are sustainable numbers. You put out a good guidance for the full year, 15% loan growth for FY24. What will go into this 15% mix? Will gold prices have to rise from here? The number of customers will have to go up substantially. Tonnage have to improve. Just give us a little bit of detail.
Yeah. Thank you. And again, good morning to you also. This quarter has been good because we see from last November onwards, we are seeing good growth in the gold loan business, mainly because I think the economic activity has also started picking up. And that is one of the main reasons why the business has gone up. Of course, the higher gold prices also helped. So this quarter was a very good growth, and we should see the same growth trend continue in the next 3 quarters also. That is next 4 quarters also. That is why we have given the earlier guidance of 15%. In fact, earlier on, for the last several years, we have been guiding and also achieving 15% plus growth in the AUM. It was only last year that there was a small dip in that. So I think we should see continuing back to the 15% growth target. Yes, that's what we should see in the next full year and also in the coming years.
Right. Mr. Muthoot, will this 50, that's good to see. I mean, you've been steady 15%, like clockwork for many, many, many years. And then, of course, there was a blip last year. But will this require, gold prices to move up for you to be able to achieve this 15% loan growth in FY24?
Yeah, I think we have taken some other steps also, not only the gold price. The branches have all been maybe re-energized. We have had meetings with all the branches. We have also appointed McKinsey consulting company to look into and give us guidance on this also. So that should also see things doing better. We have also appointed AON, the HR consulting firm, also to guide us in that side also, the HR side also. So we have taken some positive steps. And one of the 2 other things which we have done is to see that our customer stickiness is better. We have started a new scheme, which is the micro personal loan. That is to customers who are showing a good track record in gold loan business, to offer them a non-gold loan, unsecured loan, an EMI loan for 12 months. And that's only up to 1 lakh per customer. And that has actually started in the last 4 months, and it is also showing good traction. So we are able to retain the customers for a longer period with us because we are giving them an unsecured loan also. And people are quite happy with that. Along with that, we have also started, again, with the consultants also helping us with the small business loans. Again, an unsecured small business loan to businessmen who are also customers of Muthoot Finance gold loan business. They are businessmen. So small businessmen, traders, shopkeepers, etc. We are offering them a 1 lakh to 10 lakh small business loan, that also non-collateralized gold loan, looking at their track record, their payment history, the GST and all those things. And that is also just started 1 month back. We see good growth there also. But these are not assets which we want to grow individually, but again, to give more stickiness to the existing gold loan customers.
All right. Hi, Mr. Muthoot. Good morning. So 15% growth, that's good. You're going to be returning back to those mid-teen growth. But what about NIMs? There was some steady improvement on a sequential basis. Is this sustainable? You want to give us the broad number?
I think the NIMs have almost steadied, and we should see the NIMs in this 10% to 11% range going forward also. I think we have studied that NIMs area.
Okay, so 10 to 11% NIMs going forward and 15% guidance as far as the loan growth is concerned. That's a decent set that you're looking at. Want to understand a little bit about the home finance segment. The home finance segment, the performance was on the weaker side, especially in what looked like it was a seasonally strong quarter. Any thoughts here and any improvement that you see in home finance?
Yes, we have now given more thrust to the gold home finance. It was during the pandemic in the last 2 years, it was having a not having good growth there. Probably some of the portfolio was slowly running down also. But now in the last 4 months, again, we have appointed a new CEO also for that vertical. And we have seen good growth in the last quarter. Last quarter, the growth in the home loan was quite good. And we should see going forward, the home loan also taking off well.
Oh. When you say taking off well, what would you mean? I mean, what is the kind of growth that you're looking at in home finance?
Yeah.
And in terms of asset quality as well, what can we look at as a trend?
Yeah, the asset quality has always been okay. And again, as far as the, we are doing only the affordable home finance. In the affordable home finance, the asset quality has been quite good. We are at par with all the other players in the business. The AUM today should be in the 1,200 crores, and we want to take it to 1,900 crores by the end of the year.
1,900 crores AUM in the home finance segment, right, Mr. Muthoot? Got that. Sorry, you said you've appointed McKinsey. What is the remit given to them?
Yeah, maybe to see where we can grow the gold loan business also, and also the non-gold loan business to help us to actually good processes, good practices, and also see the non-gold loan business also slowly inching forward.
Okay. This I just want to kind of once again emphasize. So, I mean, overall what I'm hearing is that things have bottomed out, and you gave us an indication the last 2 times we chatted with you. You said, competitors are realizing that this is not a bed of roses, and the pendulum had swung too much to one side, and now it's coming back. So you are reclaiming in a way your rightful place. So things have bottomed, right? I mean, just to kind of ask you that again.
Yeah,
and growth will come without diluting margins. Go on.
Yeah. I think the things are coming back to where it was before all this confusions or what should we say, the teaser rates, etc. started 1 year back. I think we're all back to the earlier days, and we should see. Once again, I am sure that we had actually represented to the regulator about the higher LTV being offered by some of the banks, etc. I think they have also, the regulators also should, I think, we are not sure, but we have spoken to them, but we don't see that much of intensity in that. Many of the banks have now come back to the 75% LTV. Of course, a few of them have not come back. I'm sure they will also come back to the 75% LTV shortly.
Okay, all right. We'll let you go on that note. Thanks a lot for joining in, and all the best for the way forward. That's a 15% guidance on the loan growth and a 10 to 11% net interest margin that Muthoot Finance is looking at. The street clearly likes what the management had to say. The stock is up almost 7% right now. Let's do one thing. Let us try and slip into a quick break. On the other side, Mitesh Thakkar will be joining in for some technical trades, and we'll also try and get you some more buzzing stocks. Stay tuned.
Okay, welcome back. Well, the market is looking good. 60 points. It's come up about 20 from the day's high. Mitesh Shankar is with us with a quick check on things. Mitesh, good morning again. How are things looking? I mean, this is a good-looking screen overall. At least on the index. Broader markets, it's still mixed. I mean, I'm looking at the market breadth. It's 1:1. Your sense and what would you trade?
Yeah. So early in the day, Prashant, I talked about taking longs and booking around 18,250. We got a high of around 18,295. And the bank nifty is not participating because the bank nifty has some kind of breakout around the 44,150 level. So in that sense, I think we are going to take profits off the index positions. See if we can get an entry again closer to 18,100. I think and 18,050 or levels below that, 10 points below that is your stop loss area. But yeah, trading with long bias because I do believe that this is still a sideways market broadly on the index basis, and on stock side you will see breakout succeed and stocks making newer highs. Wipro is something which is coming on a radar today. That's a buy with a stop at 386. Look for targets of 404 to about 408 on the upside over here. And the other one is Torrent Pharma, which I also believe that the stock is getting into some kind of an up move after consolidation. So here it's a conditional buy above levels of 1680 and a target of around 1725 can be looked at. And once it breaks 1680, buy with a stop of about 20 points, which is 1660.
Okay, all right. Thanks a lot for that. Well, lots of stocks in focus, but in the meantime, let's also get a quick handle on what's happening in the world of commodities. Manisha Gupta is here to tell us more about that. Manisha, hi, good morning. What are you looking at today?
Thank you for that, Sonia. Well, I'm looking at gold in sense of Indian markets and the international prices as well. I'll talk about the Indian markets first. And with the 2,000 rupee note being taken out of circulation, we have seen the gold prices in the Indian markets from a discount turn into a premium. We were trading at 0.5% of discount in the previous week, but as of now, over the weekend, with the kind of inquiries that have been around there, we do understand that the gold is trading at a 5% premium. At some places, it has been reported that it has been 8 to 10% of a premium as well if you are spending 2,000 rupees to buy gold. But most of the jewelers across India tell us that there are more inquiries and lesser conversions that they have seen. And the reason is because 2,000 rupee is still a legal tender, so there is no panic in the market and people have time until 30th of September to dispose away of whatever 2,000 rupees notes that they hold, whether they're going to bank with it or whether they are going to spend it in the open markets there. But more importantly, World Gold Council reports suggest that there are nearly 3,85,000 or perhaps 4,10,000 jewelers in India. The number between that is slightly vague there. Having said that, the way the work is done right now, more and more jewelers are now turning into organized trade. Jewelry business is more organized now. There are stricter KYC norms. Most jewelers tell us that they are miles away from the kind of cash work that was done in jewelry business earlier. So as of now, there is GST implementations. There is BIS hallmarking, which is mandatory. So even if you go out and buy cash, your jewelry in cash, the point is that it is hallmarked. So it is already accounted for. And so there is very less way that you can really, break any kind of rules here or buy things in cash. Also, I just want to take you through on what really happens here. So if you are buying jewelry worth more than 50,000 rupees, then there is a KYC that will need to be done by the jeweler. So that is the money that is there. And if you're buying more than 2 lakh worth of jewelry, as in one bill, then you also need a PAN card to be displayed to the jeweler there. So as I said, it's going to be tough on how people will be converting more cash into jewelry because much of this business is now organized and it's going to be slightly tough there as well. But for the gold prices, we have seen a bit of a recovery coming in. As you can see, we did see a low of 1954. We're trading at 78 right now. There is recovery post the US Fed chair speech as well. Powell has said that rates might not increase as much. And when you look at the US Fed tool as well, the possibility of a pause is now at 80%. And that really seems to be supporting gold prices there. Apart from that, the talks on the debt ceiling also are expected to resume today. That's another factor that the street will watch out for. And to add from that, the banking crisis, debt ceiling, massive layoffs, all of those are some of the factors that the street will keep an eye on, in addition to the FOMC meeting minutes that are going to release this week itself. And apart from that, it is the first quarter GDP numbers from US, new home sales, durable goods. So it's a data-heavy week yet again.
All right. Thanks a lot for that, Manisha. Well, we have some clarification coming in on Balaji Amines from the independent directors. This is a technical factor that's playing out in all probability, and they will put that up for our viewers on the screen. And that explains why the stock has recovered a little bit from the day's low. But in fact, we are joined by Mr. Satyanarayan Murthy Chavali, the independent director of Balaji Amines on the show. Hi, sir. Good morning. Thanks so much for joining in. Well, the stock market is spooked today because 4 independent directors have resigned. But you all are clarifying that, in fact, it's a technical factor that after 10 years you must step aside. If that's the case, will you seek reappointment after 3 years?
So that's absolutely right on the first part, which is that we need to step down to be, since the company needs independent directors and we are no longer independent if we have had a tenure of over 10 years, which is why actually the company not only has identified additional who will take our place, but then we resign at the same time to coincide with that. So it is only a technical issue. There is no other issue on account of which all of us have resigned at the same time.
Mr. Chawali, good morning. So it's only a technical issue and there is no other issue for which this resignation has happened. Just a follow-up to what Nigel was asking you, would you seek reappointment after the 3-year period is over?
Well, we'll have to see at that point, but any of us, I'm sure, would be more than happy to be reappointed if the company so desires. But as of now, I think the current situation is that we have primarily resigned only because of the requirement to preserve independence of directors, which as per SEBI guidelines, we would no longer be considered as independent if we have a tenure of over 10 years.
Mr. Murthy, good morning. Apart from independent directors, there have been some other, there has been other reshuffle as well. Is that also because of the same reasons? I think the CFO...
No, that's a little different. Actually, Mr. Hemant Reddy, who resigned as CFO, will be replaced by Mr. Srinivas Reddy, who's also been a director and a promoter for a while. Mr. Hemant is moving to a own subsidiary, actually a 60% owned subsidiary, Balaji Specialty Chemicals, which requires, and which is actually in a high growth trajectory, it requires his complete attention, which is why he, as an experienced director, is moving to the subsidiary. And in his place, Mr. Srinivas Reddy, who's also been on the board for a while and is very conversant with the business, would be taking over the role of CFO at Balaji Amines.
The the incoming new CFO is part of the promoter group, right?
He is, that's correct, yes.
And the outgoing CFO?
Also is part of the promoter group.
Okay. And there is one more change, right? Independent director, CFO, and I think there is one more change apart from that. Could you explain that?
No, there are all the 5 independent directors currently on the board have resigned as of Saturday, and then 4 independent directors have been chosen in their place. And the CFO has moved to the subsidiary, which is Balaji Specialty Chemicals. These are all the changes.
So would any more independent directors have to resign because of this this clause?
No, so that was all the independent directors on a 9-member board. So they have all resigned and then they have been replaced by new independent directors. So there is no further reshuffle expected as of now.
Okay, no further reshuffle, got that. And the current CFO has moved to the subsidiary Balaji Specialty Chemicals. Has all of these changes, have they impacted the business in any way? Because I think that is the, primary concern that the street has as well. The stock as we speak is down almost about 12% odd. Would you want to allay concerns?
Very much so. I think the company is actually on a very sound footing. And in fact, at the time of our kind of a valedictory function on Saturday, we spoke at length about the kind of strength the company has built over this period of time, continues to grow both through expansions as well as through addition of new products. And all of them are very much in line with the core philosophy that they would either be the first or the second or, company making those high value specialty chemicals. So I think overall the growth trajectory is intact, and we do not think that this is actually going to change anything from the perspective of the company's growth.
Although numbers have been subdued for some time, right? I mean, quarter earnings are down some 55-56% year on year. They're down 20-25% quarter on quarter. So how will things look? I mean, in FY24, briefly.
Yeah, so I think I will not comment on that in detail, but I can definitely tell you about the last quarter, which is that it has been significantly impacted because of both changes in reductions in prices as well as some reductions in volumes, which is a direct consequence of what's happening in the pharma business. So there has been a significant correction in the pharma space as well, and substantial part of Balaji Amines products go into pharma. And that actually has been the consequence of that is why we have seen an impact over the last quarter. But the expectation is that things will go back to a level of normalcy over the next 2 to 3 quarters as stocking, which has actually reduced substantially in pharma, goes back to normal levels, and then demand does pick up at the time. So that's the expectation. So fundamentally, there is no issue with the business per se, and I think this is a temporary blip that has very likely happened on account of what's happening with.
Okay, got it. Mr. Murthy, we'll leave it there. Thank you very much for your time. Appreciate it. Your time on CNBC TV 18. So that's the